Hey, good morning, everybody, and welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday 29th, and happy Rosh Hashanah to our Jewish friends out there. And let's kind of jump into the economic news releases. We got the all-important release today, the GDP, so we'll take a look here uh, right now. So we'll start off with actually the jobless claims. That's kind of weekly basis. Last week we saw 428,000 new claims. We figured it would drop a little bit, and whoopee, we actually dropped below 400,000, which is good news here. So let's take a look again. We got the GDP. Last estimate came out was 1%. We figured it might have a slight uptick of about 1.2%. Woohoo! And some more good news, 1.3%. So that's at 1.3 they're projecting for second quarter, I believe it was. So and then we also have pending home sales, negative 1.3%, and negative 1.2%. Still not so good on the pending home sales. Good mark, but we got two or three that are decent news for economic news releases scheduled today. GDP probably being the most important this week of all the news releases. So let's kind of jump into headline news, and stock market's up. And then a lot of it has to do with the German parliament approving the bigger EFSF. This is basically the new subsidiary that they're going to create in the European community to try to buy these bonds, take the pressure off the European Central Bank, and start buying these bonds and hopefully stabilize for, especially for those who are struggling with the higher yields they're being paying, like Greece in there. So basically, what that means is that they're going to be improving it to about, I think, 211 billion euros uh, funding it. So Germany, this is important because they're the large economy over there. They're kind of actually taking the brunt of the risk involved here, and they really obviously need Germany's support of this. And there's concern that maybe Merkel, who's the leader over there, that maybe some people in her party may not be able to support it fully. Now the big question will be is the money that's being put into this EFSF, is that going to be enough to sustain it? Because obviously there's still concern about Italy and concern about Spain possibly needing some type of buyout of some sort. So that would be the main question. That would probably be something we'll see in the near future. More questions as to how that plays out with those folks. But it looks like maybe this hasn't been put into place yet, but it could be something that we may see in the near future. So, of course, stock market's seeing some progress being made over there. That's why they're getting a little excited. So on that, let's go ahead and take a look here. Sorry about that. That's an old news piece here. Let's go ahead and take a look at bond market, see where interest rates are at. We had actually we were just getting a little nervous here because as we saw yesterday when we started the morning up, we were way down here. It was kept looking like it was going to keep tanking, and actually pulled up late, very late in the day. Actually, reversed trend and actually settled up above the 10-day moving average here, which is important. We started off about 12 basis points lower than where we left off yesterday, but again, we've seen this go up now. We're about 6 basis points above, and it looks like we may have a little trendward going upwards again. So we may have some what this means is that we're having some price improvements versus what yesterday some lenders may have had price improvements. If they didn't, they would put it into today. And again, we may have improvement today regard to interest rates. So as we can see, we're probably looking more like we were on Wednesday, probably around no, actually Tuesday's time frame. So pricing will probably look more like what we had on Tuesday, what we've experienced. So all right, folks, you guys have a wonderful day, and I will catch you guys tomorrow.